Make money at all costs. I remember when that was the prevailing thinking of finance. It's not even close to that anymore. See, investors in the new economy are waking up and are desperately seeking companies that know how to profit without sacrificing their purpose. Join me and my next guest as we talk about Capitalism 2.0 and how he built a $1 billion venture capital fund just from doing the right thing, setting the example for all of us in our pursuit of making billions. Let's get into it. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have my dear friend, Ron Levin. Ron is the managing partner of Alumni Ventures, a $1.3 billion venture fund that was recently ranked as the most active VC firm in the US. Ron has been an angel investor, unicorn founder, and McKinsey Consultant with degrees from Babson College and Harvard. So what this means is that Ron is changing the game in the US by showing people that Capitalism 2.0 is not only possible, it's crucial. And he's about to teach us all a masterclass on VC, entrepreneurship, and current markets. So Ron, welcome to the show, man.
Thank you, Ryan. Really great privilege to be with you here today. And especially on your show, you go into topics like around alternative assets that's the 1%, top 1% of investors that are even thinking about that sort of thing. So I applaud you, applaud your audience, and it's a real privilege to be here.
You know what? I applaud you as well. Certainly a privilege to have you and all of your experience. So let's jump right into it, man. So Alumni Ventures, you got over $1 billion under management. Let's have a conversation speaking to entrepreneurs from the perspective of a couple of venture capitalists. So with that, when you're starting out as an entrepreneur and they're listening to a venture capitalist, what advice can you give them on how to win in the early days of their entrepreneurship journey?
Absolutely. And I think it's important to preface this because a lot of VCs kind of have a reputation of just throwing advice around and not really having had any experience. But I've actually been a founder of a venture-backed company, have kind of been in the trenches, getting something going, co-founded a company out of Barcelona called Travel Perk, started with myself and two other co-founders. I left pretty early on, but the company has now been built up to around 12 or 1,300 people and unicorn valuation, which is to say that I've been on the operating side. And I think as an investor, I have the privilege of having been on the side of the table of the entrepreneur. So I have a lot of empathy for the entrepreneur. So I like to give founders great advice, but I also like to be real with them, as I know you do too. Sometimes the best advice is a cold bath, but it comes with the territory. For me, kind of what got us going, sort of laid the foundation on our company, Travel Perk. It really started with the founders, having a really great founding team. Myself and my two co-founders were not a couple of kids with an idea, and all respect to the Mark Zuckerbergs out there. Those are the rare cases. We were an experienced team that had come from the online travel world. We'd worked at Booking.com, the world's biggest online travel company. And we saw an opportunity from our experience. And we built a founding team with complementary skills, a chief product officer, a chief technology officer, and myself as the CEO, a kind of fundraising and first sales and all of that. So really getting a great complementary team is so critical to laying the foundation. And as an entrepreneur, it really depends how much experience you have. You may not know the best person. Today you might not personally know that person who would be your best and ideal co-founder. And if you don't think you've got that right co-founder, it's important, I think, to take the time to try and figure out how you're going to find that person, because this is a marriage. Treat this as you would a marriage. If you want to make those billions, if you want to create a really impactful company, it all starts with the culture and the team and kind of laying down the vision from the earliest days. So that was really important for us. And we needed support as well. We weren't just going to do it as our team. And one of the other really important things we did early on was also start to build a network of advisors. And the way we thought about that is who's been down this road, who knows our industry, maybe is not directly competitive with what we're doing, but is in our space and has built a company that's, kind of 5 to 10 years out from where we want to be. Look toward that company and who founded that company, who built that company. Is there a way to get that person to be an advisor, because they're going to see around the corners? And that's been critical. And I'm amazed that, more founders, don't really invest in trying to build the support system early on, because laying the foundation early with the greatest ideas in the world, if you don't have the right people in place, both building the company full time and also, contributing and supporting the company, you may not get very far.
Yeah. So we talk about hire good co-founders. That was something you found a key to success. That's some of the early advice you can have. Hiring great advisors. I know often when I get asked, people starting out is they're worried that investors won't take them serious, right? They're like, I've never done this before. I have literally zero notoriety. Like, I'm the guy that definitely needs an introduction. because nobody's heard of me. All right, is anyone going to take me serious, Ryan? And maybe you've heard people ask this question as well. And the great shortcut, and I just want to compliment you on that, is to say, yeah, if you have great advisors, that tends to help on the reputational risk and just show that you really have, maybe you're the dumbest guy on the lineup. It doesn't mean you're dumb, but just compared to the lineup. And so if you have an advisory board and you can share that with investors, that's a great way to improve your relationship or your reputation with investors. Now, one that often comes up is product market fit. Maybe talk about a little bit of product market fit and some of the things that kind of work and don't work. What are you seeing as far as establishing product market fit, and why do VCs care so much about this?
Yeah, there are very few startups that have product market fit on day one. I mean, founders are really good, and you should be really good at selling your story. You got to show your passion. You got to show that you've tapped into a technology that maybe no one else has built before, or you have an angle to the market that no one else has done before. But you don't really know on day one if you have product market fit until you go to customers, no matter how big of an idea you think you have and what solution you've tapped into. With our company, when we got started, we had one idea and it was like way too avant-garde and out there for the market. We built it anyway, and we invested a lot in developing an algorithm that would price trips. This was like a business travel booking tool. And we went to customers and they said, yeah, that's great. But what we really need are these A, B, C, D, E, other things. And we started listening to those customers. So it's really important that you go to the market with something, but that you're listening to your customers, because you probably don't have it nailed on day one. And the way you really figure out, do I have product market fit? Because in the midst of it, it's like the fog of war, right? You don't really know in the moment if you have it. You might have it. You have signs that are positive, but you have early customers, but is this going to scale? You don't really know. I mean, one of the early signs that we picked up on and that I, encourage founders to think about in the early stages is if you let a customer use your product, not a cousin or an old friend, but someone that you don't know, but you've been able to sell into a relationship. We'll call it software for now, but it could be anything. And take it to the customer, let them use it for 3-6 months. Make sure they're using it, check in with them often. Is it, make sure that they're really using the product. And then at that kind of 3 or 6 month point, you go back to them and say, hey, we've decided to cancel the product. We're getting out of business. Sorry. What do you think? If there's an audible gasp, like, are you seriously going to take this product away from me? There's a very good chance you have product market fit, because there are customers out there that want and need your product. You just need to go out there and sell it. So that's my stress test.
Yeah, great. So the GASP test, I love that. So how to win in the early days, make sure you hire good co-founders, one that sometimes you hear the metaphor of one builds and one sells, right? So you got the MBA and the engineer come together and they can build something, or 3 founders that have that. So I think step 1, really have some self-awareness of where your skill's at, and is there a co-founder that will help you? Or is it just going to be another partner sitting on the sidelines criticizing you? Well, not necessarily taking care of their own part. The other one is get great advisors. Sometimes they help with the reputation of the firm. They add credibility to it. But most importantly, they're just there to help. And so someone like yourself who's been there, done that, done the unicorn thing, wonderful. And then finally, product market fit, release your product, then tell them you're going to yank it. And if they gasp and say, you will take this out of my cold dead hands, and you're like, okay, we got a very strong product market fit. I love it. So moving on, putting some points on the board, while it's important, also in the early days, you can really screw things up just by not knowing what you're doing and by default of being no. What are some mistakes out there, and what remedies do you have for new entrepreneurs or even VCs? I know you're listening to this show too. These are some things to look out for. What would you say as far as avoiding problems in the early days?
Yeah. Well, I mean, there's so many. I mean, you have to approach it with the right attitude. Like if you're going to be doing this startup, you have tremendous upside. You could build a product that's going to be used by millions of people. You could become fabulously wealthy. People who do become billionaires, as I know you talk about, are the people that take the big risks. They're the entrepreneurs, the innovators, not the people who rest on their laurels. But there's a lot of sweat equity too. And you have to be ready, as my co-founders and I did, to wake up at 3 a.m. because a customer is having a problem and you need to fix it. And so just having that can-do spirit, like all the time, and that willingness to be working when others are partying, and, understanding that you're making a sacrifice, but that there's, a pot of gold, hopefully at the end of the rainbow if things go well. So you got to keep yourself motivated. That's very important. And you also got to just make sure some of the practical realities, that you're hiring right, firing quickly if people aren't working out. But very importantly, if you want to build a company that scales and you plan to raise money, particularly from equity investors, venture capitalists, angel investors, whomever else, you got to know how to raise money. And there's a certain game to this, right? Companies raise in 18-month cycles. Most of the companies that I invest in, how much runway will this round get you? 18 months. It's like almost always the same, with slight variation sometimes, but basically always hovers around 18 months of runway. Well, markets can change a lot in that period of time. And it's 18 months because at the 12-month mark, that's when you need to start raising money again, because you need to leave some buffer there. So how much are you going to accomplish in 12 months? Maybe you don't have product market fit and it's going to take you longer to build the product that you need to get to market. Maybe customers aren't selling as fast or paying as soon as you want them to. Maybe macro trends change. I mean, markets go in and out of favor all the time. You got to be prepared for that. You got to have a contingency plan. Like, hey, if I'm going to make this work, no matter what happens if capital dries up? Can I make this a profitable business? Maybe I have to grow it a little more slowly than I would like, but do I have the endurance to stick in there? There are companies that go years and years before they raise venture, but by the time they do, they've already have a good business and they're in a good position to raise money. So there's not just, one playbook for success. Great companies have been built many different ways, but it's important to have the commitment that you're going to make this work no matter what. And if the cash runs dry, what are you going to do? And just always be a little bit paranoid about what if things go wrong? What's plan B, with the idea that this product is so important, the market hasn't seen it yet, and I'm going to get it to market no matter what. So really important to just keep focused.
Yeah, and you're right. And often markets can turn on a dime. Not always, but sometimes they can. And really having those contingency plans, as you and I as VCs, we like to see that. And we'll always ask you, or you can count on, at least through your fundraising times, that a VC is going to say, but what are you going to do if this plan doesn't work? It's helpful to have that. What's your plan B? Just like Ron was saying. Another one is, how do you explore companies that come to you and they're looking for an investment as far as differentiation? Like, how do you walk an entrepreneur through? What do you do there?
Yeah. I mean, really everything we invest in, there needs to be something differentiated about it, some kind of moat, or if it's really early, maybe the moat's not there yet, but you've got a plan to get there. And it's really important to think about, because there's so many companies out there. We get pitched, thousands of businesses every year, and there are a lot of problems to solve. So there might be 1,000 business plans, but there are 1,000 different things to solve. But how are you going to do it differently is really important. Do you have a technical advantage because you've got an army of kind of PhDs, you've come out of a lab and you've uncovered some science, you can patent, that has a commercialization potential? That's great on the more sciencey or techie kinds of things. But it could also be how you're going to approach the market. Maybe there's some interesting tech that's been built, that's been applied to one industry, hasn't yet been applied to another industry, because some industries, heavy industrial industries, may move slower than, healthcare or financial technology, for example. So there's always different approaches. And, what's your unique advantage? I mean, part of the differentiation is really the team, because do you have what it takes? Do you know this industry, right? Do you know something about it that most people don't know? With my co-founders and I, we had all come from online travel. Like we knew, I can't say we're experts, but we knew enough that it was more than the average person. But a lot of people have ideas that are maybe interesting, but they've never really been in that industry and are just going to be feeling it out. And they're going to spend the first year just kind of learning how the industry works. And, as an investor, I don't necessarily want them spending my money trying to figure out how things work. I want that kind of done ahead of time. So, I would encourage founders to really focus on something that is not just an idea that just came into their head, but is really something that they've spent time thinking about, that they've been interested in for a while, have worked in professionally, have studied, have some connection to, because that's where you're going to uncover, those opportunities and think of the ways that you're going to create something that's different from what else is out there, because you're going to know what the market landscape looks like. As an investor, it's sometimes hard for me to know. I look at so many different ideas. I'm a sector agnostic investor that oftentimes I get pitched on something and I don't at first really know what the landscape looks like. But as you dig in, usually you start to figure things out. You can always tap some experts. But for the entrepreneur, your advantage is knowing that industry cold and being able to, outmaneuver your current or future competitors.
I love that. Yeah. And being able to outflank. So sometimes you're trying to be better. Sometimes you be faster. Sometimes you be cheaper. Sometimes you provide frictionless process where everyone has friction. A great book that it's not the end all be all, but one that outlines that way of thinking is Blue Ocean Strategy. Often that can be a little bit helpful with Strategy Canvas to say, how do you differentiate yourself, or how do you want to differentiate yourself, or where's the gaps in your market? So there's so many areas, and just by differentiation, that might be able to lead you into a new market. So yeah, we like to see the competitive moat. We like to see that differentiation, better, faster, cheaper, smoother, whatever it is, help us understand. And that might be the difference between getting a check or not. So let's transition to the market. I'd love to hear. We can't have a show called Making Billions without talking about the market. So what are you seeing out there? I know VC, it's some choppy waters right now, brother, but I'm curious from your vantage point, what are you seeing out there right now?
Yeah, it's been choppy the last couple of years, no doubt about it. Valuations have come kind of down to earth, and it's a cyclical thing that happens. Valuations reset and investors retrench a little bit, and fewer companies going public. That's not great for our industry. What's a little bit unusual now is just the dichotomy with the state of the public markets, where, public stock markets all-time high, inflation is in check, unemployment's pretty good. All these, there's still growth, and big companies still, doing well in profits. So there's a little bit of a divergence there, which to me raises the sound bells of, hey, this is a value opportunity. There's money to be put to work. Valuations are low. Companies have gone back to basics in terms of what founders are building, what investors are looking for. Now's a pretty good time to get into the market, I think. You got to be a little bit contrarian in this business. But we're seeing a lot of movement, industry-wise. Everything is an AI play these days. There were legitimate AI-driven companies a few years ago. It's not brand new, but now every company we see has, okay, how does AI going to affect us, and how are we going to scale because of new ways of developing drugs or new ways of doing data analysis or equipment manufacturing, repair through AI, like all kinds of applications. So really seeing a lot of momentum there, a lot of shift right now, I think, into industrials. How is technology going to affect the manufacturing industry, the construction industry, real estate, a lot of kind of these old school industries being transformed, and a lot of movement too now on deep tech. We're seeing movement in advanced computing, quantum and high performance computing, things that, may not really change our lives tomorrow, but a few years down the line can have a very big impact. Even on the hardware side, I sometimes say that not every problem in the world is going to be solved by software alone. I think entrepreneurs and investors have to be open to the idea that sometimes there's a hardware play to reach a big market. A lot of really cool stuff happening right now, actually.
Yeah, that's awesome. And one of the things that VCs always get labeled is we're always reading, right? It's like this. If you like to read, maybe venture capital is the place for you. But the reason why is we've got to stay on top of industry trends. What do you do to stay on top of it? Or what would you recommend some of the entrepreneurs do? Any blogs you might recommend that they can subscribe to, or anything at all to stay on top of industry trends?
Yeah, there's a lot out there. There are tons of books. I do Audible. I try to at least listen to most of the popular kind of VC books. If you're interested in impact investing, you can pick up my book, Higher Purpose Venture Capital. I'll give a little plug there. That's around how venture can help back entrepreneurs solving big societal, social problems, essentially. And there's so many blogs, and I almost don't have favorites because I read so many of them that I just need a deluge of information coming at me because I need to know what's happening in the market. I also see a lot just by the vantage point of being an investor, and we see kind of what comes inbound, what deals that get referred to us, like kind of stay on top of the trends. I think it's really important for entrepreneurs to be like a little bit of a step ahead. You don't have to be an expert in everything. I'm unusual that I'm a generalist, so I need breadth of knowledge first and foremost, and then depth kind of second. I think an entrepreneur should be pretty deep in something first before worrying about getting into everything. So when I was in travel technology, people would read these online publications, Skift and FocusWire, and just like the really focused stuff on travel tech, because that's where you learn what investors are thinking, what other entrepreneurs are doing. So take your industry and whatever's out, whatever blog, podcast you can find, and then also just stay on top of general news. It's really important. I had someone the other day asking me if the war is still going on between Russia and Ukraine. It's like, dude, read a newspaper. You just got to be aware of what's going on in the world. So, to try and stay on top of all the macro news, certainly the macro financial news, digital or on a physical paper. I still read physical paper sometimes just because I find it just easier to handle than being on a device all day long. But whatever works for you, just consume information, particularly in the industry that interests you, like there's no tomorrow, because it's so important to be just at least a step ahead.
I love that. And, with all your experience, your background, now I'm curious. We listen to a show called Making Billions because we're looking for an unfair advantage, whether you're an investor or an entrepreneur or somewhere in between, like we call an emerging fund manager. All of those folks listen to us in over 100 countries in the world, and they come to us to listen to guys like yourself and myself on how to get an unfair advantage. What unfair advantages can you provide for our listeners today?
Yeah. So for entrepreneurs, I think there's a little bit of business advice and a little bit of personal advice. On the business side, every good entrepreneur should have a high IQ, clearly, and there are different forms. There's the Harvard, MIT, Stanford PhD, and then there's the street smarts that also can be just as valuable, if not more so. School of Hard Knocks. Different ways of acquiring that intellectual capital that's going to thrust you ahead, give you that great idea. But ultimately, being an entrepreneur comes down to people skills and EQ. It is essential that you're able to build not just a great founding team, you're able to hire and retain incredible engineers, salespeople, HR. You got to manage legal, accounting, marketing, sale. I mean, all these different functions. That's not easy for anybody just to come and do. And a very technical founder isn't necessarily the right person to lead an organization as it grows. But there are ways you can get better. There are books from Dale Carnegie through whatever that's published last month on kind of people skills. And don't neglect that, because you need to manage relationships with employees, with customers, with stakeholders, with partners, everybody around the world. And it's just vitally important that you're able to competently do that, to be fair, to be open, honest, be a good person generally, because people will remember you when you're gone, and you want to be remembered for being fair. And that doesn't mean always saying yes to everybody. And sometimes it's very hard to say no and to cut ties when things aren't going well. But you just got to be an honest dealer and just really work on those people skills and think about it. Step back and think, oh, that meeting didn't go well. How come? Was it something I said? And just really, really keep that in mind and have empathy for others who are around the table with you, even maybe the people you're negotiating against sometimes. Put yourself in their shoes and, just try to relate to everyone you're dealing with on a day-to-day basis. So that's kind of my professional advice. On the personal side, I always tell people to go out and travel, in the sense that there's a lot of stuff that happens in the world that it's impossible for everyone to know what's going on. And outside of our borders, our national borders, even our state or county borders, there are different cultures, there are different opinions, different attitudes, there are different ways of doing things. And very importantly, there are different business models that might exist and be very successful in one part of the world that has never, ever been seen in your part of the world. Get inspired, open your mind to new ideas, and go out. And if you can afford to literally travel, great. If not, you can travel online in, virtual ways, and really explore what is out there in the world, because there is no end to the number of ideas that you might have and the inspiration that you might get just by exposing yourself to the big world that's out there.
Yeah, I love that. So travel, that would be second piece of advice, is getting out there and travel and experience things and learn from different perspectives. Just like we teach our kids, different isn't wrong. It's just different. And the other one is for entrepreneurs is just develop relationships. And on this show, we talk about reputation, relationships are your two most valuable assets. So continue to develop those, but also EQ, meaning the intelligence quotient. As the saying goes, people work is better than paperwork. And if you don't understand business, if you don't understand people, you don't understand business. So business is really about interacting with people and getting things moving in many different ways, whether it's sales revenue, motivating people, leadership. There's so many layers, but it all comes back to your success in business does come down to some degree on how successful you are in dealing with people and interpersonal relationships with yourself, your partners, and also the market that you operate in. Would you agree?
You nailed it.
Good. Thanks, man. And what about number 3? Anything that maybe to investors that you can provide from your experience?
Yeah. So a lot of my mission, the fund that I operate, I run a seed fund. We invest in pre-seed and seed stage companies, very active. My team and I, we make more than one new investment every single week. We start with small checks, taking flyers, but sometimes write bigger, high conviction checks as well. We see a lot of stuff. We don't specifically have a mandate around sector or a specific thesis other than to be well diversified. But within that, I really believe in creating companies and investing in companies that are going to make a difference in the world, and particularly those that are going to solve problems for those that are less fortunate, that don't have the same access, resources, education, perhaps as others do. We as VCs and angels, if we're investing, whether we're investing our own money or other people's money, we're in a very fortunate, privileged position. We can really directly affect the outcome of whether companies and ideas succeed or not. They're great ideas that just never get funded because no VC or investor will back it up. So it's not just, a correlation. There's an actual causation that a VC can, or an angel investor can have. So think about what kind of problems you want to solve. What is impact? Impact can mean different things to different people. What's important for one person is important to another. But I would challenge investors to think about, what are the big problems that you care about? Might it be longevity? Would you like to live a longer, healthier life? Well, that might be something worth investing in. Is it education because, you think maybe your kids' schools are not performing to the level that you think they should be? Is there something to do on that end? For everybody, it's going to be something different, a different priority. But think about solving like a really big problem, because you as an investor, you're kind of in the background. You're not the one usually on the front page of the journal. There are some investors that do make it to some kind of celebrity status. But for the most part, we as investors are in the background, but we can really monumentally support certain companies that have a very important mission and are going to improve outcomes for everything from folks who don't have access to a credit card because they don't have any credit, to taking a loan to pay an unexpected medical bill, to those who maybe can't get a job because they don't have the right education, to those who might have a disability, to all kinds of things. There's so many societal problems in the world that are worth solving, and there are great entrepreneurs doing that with highly scalable ideas. My book, Higher Purpose Venture Capital, talks about 50 of them. Venture-backed companies, a few I've invested in, most of them I've not, but I've gotten to know the founders and just wanted to share their stories of creating amazing, impactful companies that venture capitalists are backing today. So I just encourage VCs to think about, maybe there's a market for that next NFT. That's great. But who's that really solving a problem for? There are big problems out there to solve. And I would encourage my fellow investors just to think about working with those entrepreneurs that are really going after a big problem.
Awesome. I love that. Before we jump into the final remarks, is there anything else you'd like to say, or how to reach out to you, how to connect to you? Obviously you have a book, maybe closing remarks.
Absolutely. Yeah. Appreciate that. And thank you again. It's been a great privilege talking to you, and especially with your audience that I think understands my language, your language.
We're picking up what you're laying down, brother.
Yeah, absolutely. Reach out. So our Alumni Ventures, we're at av.vc. It's one of the easiest URLs you can remember, just Alumni Ventures, av.vc. Reach out. I lead the seed fund. If you're raising pre-seed or seed funding, happy to hear from you. We're strictly a co-investor. So best to reach out to me once you have a term sheet or are very close to signing a term sheet with another VC and are looking to fill in a round. That's when to contact us. We could be a very helpful co-investor. We support our entrepreneurs in many ways that are complementary to what a lead investor does. So happy to chat more about that. And if you're interested in the impact side, and whether you're an entrepreneur, an investor, or just curious in how to help the world, my book is Higher Purpose Venture Capital, available on Amazon and all the others. I have a website for the book. It's higherpurposevc.com. And connect on LinkedIn. Just send me a note, say you heard me on the program, and I'll be happy to accept and engage if you want to discuss anything.
Awesome, man. I'm looking forward to all of those things. And so just to summarize everything, build relationships and your EQ. The second one that he mentioned is invest in profit with a purpose. That is where Capitalism 2.0 is going. I think Ron and I both agree no harm can come from investing in companies that also serve a higher purpose. And then finally, just travel and learn about what is different, just to expand yourself as an investor and as an entrepreneur. You do these things, and you too will be well on your way in your pursuit of making billions.